so many funds have appeared recently, triple funds. I hear even quadruple funds are out there now. And the popularity of these has become extraordinary. If you look, for example, at FAZ, this instrument traded, 80, 90,000 shares last winter. And look at this, 88 million. This one instrument alone on Friday. It wasn't that many decades ago that 88 million was a good, strong day for the entire stock market. And so these completely new instruments have come in. FAS, same issue here. This is a very new product, trading tens of millions of shares every single day. So just really extraordinary how the market and how the financial products available to us have changed. So I'm just kind of ripping through these real quick. So ETFs are similar to a core list, a good place for generating ideas. Unless it's not obvious, profit charts are streaming charts. I can click on this checkbox and it'll stream in real time through the day. Being a Saturday, we're not going to see anything happening. But you can also change how much time you're looking at, as little as 1 day, all the way up to all, which in the case of something like, say, the Dow Jones Industrial Average, goes back literally to the beginning of the 20th century. This goes back to 1900. And this can yield for us some really interesting graphs. I find looking at long-term graphs terribly interesting, and I'll actually take this opportunity to show you a couple of long-term graphs to show some of the things that I find so interesting about them. We'll just look at a couple. We'll look at the Indu, and we'll look at the S&P 500. So this is the Dow, as I said, for the past 110 years or so. And I tend to be very minimalist when it comes to my charts. I like it clean and I like it simple. And there's only a couple of items on this particular chart. One of them is a Fibonacci fan that spans from the bottom of the Great Depression, when the Dow was at 40.60 on July 8, 1932, all the way up to what I consider the true market peak in November of 2000. Even though on a nominal basis we went higher than that, my point of view is that the market's actual peak was at the prior bubble we were at. And what fascinates me about this fan line is the adherence the prices have had with this line. Let's just zoom in on a couple of places to show what I mean. So for a terribly long time, through the 70s, the 80s, the 90s, this fan line, which again is anchored in 1932, held tremendous sway for the market. We can see at the bottom of the bear market in the 70s, it just about touched the bottom of that in the 80s, and it just sneaked below it for a little bit. But by and large, this has been very obediently following these fan lines. And it gets really interesting up here because starting in 87, going on for many years, it did little more than oscillate and just cling like iron to a magnet, either one of these lines. And when it got enough strength, it would actually push to the next level higher. And as we can see here, as it began its descent in the big tech bear market back in 01, 02, it hit that line, pushed up just to the penny to the top of that other line, again fell. You could just, I mean, this is right on the money, both here and here. So in repeated instances, finding support or finding resistance at these particular levels and then moving on. Now, looking at more recent history, we can see that the drama of last autumn and this winter had that price cut like a hot knife through butter. You can see here it briefly found some support back last summer, finally succumbed, plummeted very rapidly to the next line, and has been kind of spasming around that ever since. To my point of view, I do think that the bear market is still very much in play and will resume sometime before this year's out. September, October, something like that, and that we're not really going to see the end of this until we reacquaint ourselves with this lowest line, which is, Dow 5,000 somethings, in the 5,000s or thereabouts. So I think that this zone we're looking at right here represents a tremendous amount of risk for the bulls. Let's turn our attention to a similar chart, but one that I find just as interesting, the S&P 500. This is on a daily basis. This goes back to the beginning of, I think, the index's creation, although I'm not absolutely certain of that, and I'll allow it time to load here because we're dealing with tens of thousands of data points. This is one of those times where I have to make small talk while I wait for this thing to load. Okay. Well, this has been going so smoothly. I hope we're not having trouble all of a sudden. Oh, there we go. Thank you. All right, so this is the S&P. Little more detail on this one. I've drawn a couple of items in addition. So we have our familiar fan line here. As before, and this actually was even more remarkably obedient to the fan lines, we see in instance after instance the adherence, the obedience, if you will, that the prices had to these lines. Because without them, if I hide the lines like that, you see what everybody else sees, which is just a bunch of squiggly lines. And I've got my little X-ray goggles here that I think can provide extra insight into what the market's doing. And what I find is mesmerizing about something like this, again, is like Franklin Roosevelt wasn't even in office yet, or had just gotten into office when this anchor point was established. But if we look at the past couple of bear markets, which on the S&P are far plainer than on the Dow,